Now, as was introduced there by Liz, this session is about financial crime and FinTech. And I wanted to start things off by talking about how FinTech and advances in technology can actually help us fight financial crime at companies of all sizes and levels, really. And Charlie, obviously you're at the coalface of this somewhat, given that you're running a RegTech company that uses technology to tackle and address financial crime. Perhaps you could talk a little bit about how you're using technology and how you're doing things that perhaps weren't possible a few years ago.
Thanks, Oscar, and great to be with such an amazing panel today. So I think the reason to start the company is because of all the different panels today and all the different things you could talk about, by far the biggest problem, by far the most expensive, and by far the kind of least known problem is that of financial crime. So if you're a large FinTech startup today, you might have 200 people or 10, 20% of your entire headcount consumed by compliance. And the point where you say compliance, you mean money laundering, terrorist financing. And while startups or scale-ups might have problems, the big banks have even larger problems. You've seen in the past few weeks, Danske Bank, Swedbank, billion-pound fines, CEOs being fired. So even those companies with huge resources still experience huge problems. So for me, the entire point behind starting the company was to come at the problem afresh and to try and solve the entire problem. And I think in the past 5 years, and with Jan's $30 million, hopefully we'll make some good progress.
And Denisse, perhaps given that you've been looking at this for a while, perhaps you could give some insight into how things have changed in terms of the approach to compliance and regulation over the last couple of years.
Sure. Thank you for having me as well, and also for the great panel that I'm on. And just very quickly, just to clarify, so I am a financial crime specialist, and Firedrake specializes in integrating FinTechs and RegTechs into existing financial institutions within their frameworks. So how has it changed? Well, I remember the days when people didn't even do sanction screening. And I think it's important to kind of remember when we're talking about, how can FinTech and RegTech make the fight against financial crime, support KYC processes. I think we need to scale back and maybe ask, how can FinTech and RegTech actually make the fight against financial crime more effective? How can we actually change the incentive structures of people who are trafficking humans, drugs, wildlife, arms, people who are abusing their positions of power, and people who are financing terrorism and actually carrying out terrorist acts, because at the front of it, that's what we are supposed to be here to do. And quite often, especially in large financial institutions, and even in some of the smaller firms who are looking to fix a problem and to fix a business problem, kind of tend to forget that that's the reason why we're here. That's why we have this industry. And so again, so going back to your question, looping back around, again, people used to do everything manually, right? And there are places where people still use Excel spreadsheets to put in names. I remember when Panama Papers came out, there were quite a few banks who actually hired individuals to be able to actually run through the names of their companies because they didn't have the ability of feeding in multiple bits of data into a system or from different systems against the Panama Papers spreadsheet and actually come up with meaningful outcomes. So, the use of AI, the use of natural language processing, the use of zero knowledge proof, which was mentioned earlier. I mean, it's like magic, and there has definitely been a bit of a transformation, but there's still definitely a long way to go. So you've got the RegTechs and FinTechs, and then you've got the people who used to do everything manually and maybe not do anything at all. And definitely there's more of an awareness.
And mentioning AI and machine learning there, that takes me on to earlier we heard from Chris Woolard at the FCA. He gave a speech in the main hall, and something he mentioned in passing there was the fact that the FCA are looking potentially at introducing AI and how they can use that in monitoring and compliance. Perhaps you could talk, Nick, a little bit about how the FCA is not just monitoring this new breed of RegTech and FinTech startups that we're seeing coming through, but also perhaps looking at the technologies they're using and saying, oh, maybe we could utilize some of that.
Sure. Thanks again for having me. So we regulate nearly 60,000 firms, and so we have to be a data and analytics-led regulatory agency. We're not as much as we should be, frankly, and so picking up Denisse's points, we are too reliant on manual effort, human processes. We rely a lot on tip-offs and information from the market. There's a lot that we can do to start deploying more modern technologies to proactively scan financial markets. So we're looking at things like how do we use web crawling and web scraping to identify changes, particularly around kind of the perimeter of our regulatory remit, where our visibility is perhaps less as high as it would be for those markets that we supervise in a more intense manner. We're looking at things like how do we deploy things like agent-based modelling. So it's not something the FCA's really spent much time on before. And when we look at firms' financial crime systems, we often do that through reviewing policies and procedures, interviewing people, looking at some of the outcomes of the transaction monitoring solutions. We don't often get our hands dirty with the actual technology solutions. And so we're looking at how might we build more advanced data assets that we can plug into firm systems where we know the crime typologies that are hidden within the data asset, and we test the firm's ability to identify those kind of crime typologies. So we actually get our hands on the systems and interface directly with the technology that they're using day to day. And that may be for transaction monitoring, but it could equally apply to things like sanctions. As Denisse has mentioned, some firm systems are based on perfect match between what they put into a system and a name on a sanctions list. Okay, that probably picks some of the individuals up. Some may have a fuzzy match. That probably does a bit better, although there are some very poorly performing fuzzy match systems. Other firms are starting to use things like phonetic match, where you can actually make spelling mistakes. You can get confused about the language that the name was originally expressed in, those kind of things. And those systems are more advanced and more capable of coping with human error and indeed nefarious acts by criminals. So we're looking at all these kind of things, like what is the value of phonetic search? How do we use agent-based models to build really advanced data assets to test firm systems? How do we deploy web scraping, web crawling to monitor financial markets more effectively? How do we use things like network analytics to better detect new forms of insider dealing and market abuse? Alongside just a whole load of effort to just reduce manual process within our own operations. So in order to do a lot of our financial crime work, we collect tons of documentation that someone has to read. If there are ways of shortcutting some of that to help us find the most pertinent and relevant parts of documentation more quickly, then we can be more effective and more efficient as well. So there is a myriad, frankly, of opportunities and use cases, but we, like many of the firms that are trying to adopt these technologies, are still at a pretty early stage.
And is it more of a two-way street than it was in the past? In my head, the regulator is going and saying, "Are you doing this wrong?" But when you describe it there, it sounds like you're learning about these things at the same time as some of the startups that are adopting them, or established players.
Yeah, I think that's certainly our intention. I think you have to recognise the cultural resistance or the incentives structure that exist, particularly for large institutions, to innovate rapidly in the financial crime space as a large institution where you have a history of large sanctions and penalties for misdemeanours. The conditions are not exactly perfect for a fully open, transparent, explorative environment between a regulator and a financial services firm. But we are trying to create environments and spaces where that learning, that mutual learning, can occur. So the Sandbox is a good example of that. Things like the hackathons, the tech sprints that we run are another example of that, and our biggest one to date was on financial crime, so that's no coincidence and no mistake. Our next one this summer, again, is on a more specific and niche part of financial crime technologies. So yeah, absolutely, it is an intent that we have a more collaborative sharing relationship, but we must recognise the cultural resistance and challenges in making that happen.
And I want to shift gears slightly now to look at perhaps financial crime targeting fintechs rather than fintech and regtech addressing financial crime. And I know nobody wants to specifically address companies because obviously we don't know the exact details, but this is a topic that has been in the news recently with Revolut. There's been some reporting around its sanction screening technology there, but also N26, the German startup bank. There's been some reports in the German press about account spoofing, people taking over accounts there. And I wonder, Jan, from an investor's perspective, not speaking specifically about either of those companies, but Is this something that makes you think, maybe this is something I should pause and think about the next time I see an exciting fintech business opportunity? Where does the idea of, how highly do you sort of rank compliance and fears around these startups being attacked because perhaps they're seen as a weak link or a weaker link than established banks and bigger players?
Yeah. Well, the disclosure's out of the way, that we're investors in Charlie's company. I could say that, as you said, these are just examples of companies that might have been in the press, but obviously the remit of regulation is for all players who touch money or money movement. So they'd be fintechs, traditional banks, but also many people don't realize perhaps real estate transactions are all subject to, whenever you have a money movement, subject to KYC, AML, and ultimately the analysis of the sender and receiver of the transaction. So the way we think about it is as follows. We absolutely don't view this as an optional. The regulation applies very clearly. It's an area that the fintech companies have learned to emphasize. I would say seeing a definite massive progress between the companies, sort of the startup phase, whether Series A, B, or C, in the fintech space today versus 5 years ago. The emphasis on compliance is far stronger. So that's the first thing. The second thing is, it's already been said, the drivers behind growth of a lot of the fintech are more open borders, faster customer acquisition, and therefore the pace of growth, more cross-border transactions, remittances, people traveling more, people sending different currencies. In the past, there were high barriers to sending, even 500 euros from the UK to France. Now we know it's very simple, and with that arises this need to conduct these kind of checks. And that leads me to the final point, which is the only way to do it is through technology. So we not only invest in fintech, but also regulatory tech companies. As Charlie mentioned, we led his recent round in ComplyAdvantage, and that's to do with the fact that really only through tech you can analyze in real time, in a timely manner, and accurately the vast amount of data that is available. That is really the only way, and the benefit to the clients is the baseline is compliance, but it is really better, cheaper, faster. So to us, certainly looking at it as investors, it's a massive opportunity because we live in a digital, in an electronic world where precisely using technology is a perfect application of tech, in this case machine learning, to detect anomalous transactions or misspellings of different names, account spoofing, and so forth.
And Nick, perhaps we could look at it from a different perspective. Obviously, the FCA has been very accommodative of startups with things like the sandbox. Do cases like this make you think again about the balance you've struck between encouraging innovation and ensuring compliance is at the standard that you want it? Or do you think these are just around the edges of what has otherwise been a pretty successful program?
I don't think it specifically makes us think again about the balance that we're striking. You used the word accommodative. I'm not sure that's necessarily how I'd characterise our support for innovative businesses. So we have certainly sought to provide mechanisms through which innovative companies can better understand financial markets, can better understand regulatory requirements, and can test nascent and unusual business models and practices in live environments. So we are attempting to try and stimulate that innovation. But in order to operate in the United Kingdom, you still need to meet the standard requirements of authorisation, and particularly around financial crime. I think in the same way, when you've chosen two fintechs for us to talk about, we could equally have mentioned a large number of large incumbent institutions.
Well, it was earlier. We talked
Indeed.
about dance banks.
Indeed.
Yeah.
So I think we need to be. I think frankly, all of us need to be quite honest actually about the extent of financial crime prevention that is occurring in financial markets in the moment and observe that it isn't very good, frankly, and whether that be a new FinTech that's coming to market and has been targeted, if using your language, or whether it's just an incumbent that's been operating for a long while with multinational reach, on aggregate, the outcomes that are being achieved in financial crime prevention are not very good at all. So I don't think it causes us to rethink materially our approach. I think what it probably does is give a bit of a warning signal to those startups who are about to proceed through a scale-up phase. And I think what you might be seeing is some of the teething pains that businesses go through when they go from being an owner-managed, everyone does a bit of everything, we're all pulling together, we're a flat hierarchy, we have minimal systems and structures in place, but we're agile, we're flexible, we're dynamic, and we're very close to customer. And we're now trying to acquire customer at scale. And we're now more within the purview, the remit, the oversight of regulatory agencies, because the harms that we impose on the market if things go wrong are more material. And I think there's more in there about warning signs and lessons for any organisation that's going through that startup to scale-up phase, to just be mindful of, be careful of the new risks you're exposed to, really think about the harms and outcomes of your activities on the market, and think through and engage with the regulators about any concerns or risks you may have about your control weaknesses. Don't carry on regardless, engage properly. So I don't know, so it's a very long answer to your question, but I don't think it makes us fundamentally rethink how we're going to approach innovation.
And you mentioned there about across the spectrum that perhaps we're not doing enough on financial crime, the standards aren't great. Denisse, you mentioned it earlier, the fact that you think there's a lot further to go. What do you think that looks like? Where are the next stages that RegTech or compliance in general needs to go?
So I think just jumping on the point to maybe just qualify a little bit more Nick's comment. I mean, so there was a survey 2017 by LexisNexis that basically said that on average, European financial institutions are spending $83.5 billion on anti-money laundering compliance. That's just AML compliance, not other kind of compliance, right? That's another kind of, God, goodness knows how many billions are being spent on that. At the moment, statistically, or the statistic that's been thrown around for years, is that between 3 to 5% of global GDP is laundered annually. So that's up to, well, there's a figure that's either 1.5 trillion or up to $2 trillion US dollars around the world. The amount of assets, the criminal assets that are being seized, are approximately 1% of that. So when you put all of those statistics together, it's not working the best way that it could be. And a little bit of a history lesson. FATF was only founded in 1989, right? So it's been around for 30 years. That's the FATF, setting up the global framework, setting up global standards. I recently read that the first compliance function was founded in 1999 in an American bank to prevent anti-money laundering. So that's less than, that's not that long. So even though anti-money laundering has been around for 30 years, kind of, in terms of from a business perspective and implementation, it's been less than 20 years. My maths are not very good. So again, there's been a lot of growth, but the way I see the future is kind of where you have a development of public-private partnerships, where you have, so I'm a fan of Nick's team. I think he knows that I'm a big fan of the hackathon last year. The stuff that's come out of it has been incredible. Some of the technology that is available is, mind-blowing. I mean, the stuff that ComplyAdvantage do as well is just absolutely phenomenal. But again, technologists can't do things in isolation. You have people who are innovators who have incredible ideas, and then you have people who are technical experts, kind of like me, who read a lot of very boring pieces of paper and are able to interpret what possibly could be needed. And then you have the regulators, and you have law enforcement who actually see crime happening. You have the banks who have access to incredible amounts of data that, again, they can only point their resources. They have, they don't have, infinite resources. They can only point their resources to where they say, hey. So again, for example, there was a coup in Sudan recently. That means that there's probably a lot of money coming out of Sudan. Is anybody looking at that? Maybe, maybe not, right? Nobody's been told to look at that. Nobody's been advised to look at that. But, one of the worst atrocities, Darfur and genocide, they're finding stashes millions of dollars in cash in these individuals' homes and warehouses, and they're having to be moved by the truckful. Gold is flowing out. So we know that probably there's a lot of money coming out of that region at the moment, and surrounding financial centers such as Kenya and Uganda, and possibly transit points such as the UAE. But nobody's been told to do anything about it, right? And unless you have an incredibly proactive financial crime team, an incredibly phenomenal head of financial crime who's saying, let's look at the flows. Let's look at what money's coming out from these regions. Let's maybe take a 30-day look back and see, is anything actually touching our banks or not? They're not going to be able to do that, right? I mean, people have incentive and are good at taking incentive and moving forward with things, but without any legal basis or without any intelligence to kind of trigger that or act as a catalyst to do that kind of work. So what does it look like in the future? I think combination of public-private partnerships, combination of incredible technology that already exists, but looking at new applications and also looking at different models, such as kind of like the airline industry, the healthcare industry, the sustainable development, what's going on around those areas, and seeing how we can use some of that to not just focus on technical compliance. And I guess the theme of this session is moving beyond tick box compliance, but looking at how do we enhance transparency, how do we enhance accountability. That's my 2 cents.
It reminds me of your point about only setting up the first anti-financial crime units in 1999. I read recently that Swedbank have only just set up an anti-financial crime unit within their bank after losing their CEO for a multi-billion-dollar, money laundering scandal. So just goes to your point that we're clearly still a long way to go. Mm-hmm. And on the point about technologies and applications of technology, I wonder, Charlie, is there anything that you're excited about in terms of new ways to use technology in your business to address KYC, anti-money laundering issues?
Yeah, so I think I'm extremely excited about everything possible going forward now, right? I think right now we have over 100 engineers and developers and machine learning people, and we're spending a huge amount of money on the server bill. So I think in terms of what we built in the past 5 years is simply the scaffolding, right? And now we have 400 clients feeding into the system. And so I think now we have that foundation and infrastructure. What we can build on top of it, now we have that in place in terms of knowledge graphs, or in terms of graph analytics, in terms of the natural language processing, in terms of all the things we can build there and everything feeding in. And also now we have it working at scale, right? I think the next couple of years in terms of what we should be able to deploy and the impact we should be able to have on money laundering, terrorist financing, but also on the kind of industrial, bureaucratic, the humongous cost base. So in terms of the numbers that Danielle quoted, I think it was 14 billion in Europe. I think it's 12 billion in the US, right? So there's kind of 30 billion to spend, of which the vast majority of that is people, right? So it's people in offices who spend all their time wading through false positives, but at the same time miss hits as well. So they're kind of, not only they consume the incorrect matches, but also they're missing the bad people too, right? So at either end, it fails completely, right? So I think hopefully we now have the resources and the funding and Jan support and the client base to be able to really now make an impact.
Can I add a couple of things? So I think just something I'd draw out though is that so there's great opportunity from these new technologies. I'm a big fan, as you are, and I think there is profound inefficiency and waste that could certainly be targeted and improved through the adoption of new technology if you can create the right environment for that to occur. But I still think we also have to tackle, and I think Denisse touched on this a bit with the public-private concept, we have to tackle the fundamental challenge, which is that criminal networks do not care about institutional boundaries and certainly don't care about jurisdictional boundaries. And that if our fight against financial crime continues to be a institution by institution, national regime by national regime response, we will always be behind. And yes, we will catch the incompetent criminals, of course, that will be fine. Those that decide to launder through a single institution, move their money around in very large cash amounts, turn up with gold, deposit at a retail branch. We'll pick those people up.
HSB Mexico
Right.
thing. Yeah.
Okay.
That took a while.
I'm not going there. So, yeah, fine. A rules-based system or even a threshold-based system with some pretty basic financial crime training, you're probably going to pick those people up. we need to move towards far, far better ways of sharing knowledge and timely insight about new forms and typologies of criminal behaviour between institutions, between regulators and institutions, between law enforcement and institutions, and cross-border. And so the previous speaker touched on this. I'm particularly excited about the technologies that might enable us to do that. Because the alternative is you put all of the data, say you put all the transactions data in one place. Legislatively and from a statute point of view, that is phenomenally hard to achieve, and you create an incredibly attractive cyber asset that everyone will try and hack. And it will take you years to make it happen. So there's a lot of new technologies, and they're very esoterically named and they're very complex, but they tend to sit under a perimeter, a boundary of what's called privacy-enhancing technologies. And one of them was mentioned earlier, zero-knowledge proof. There's others, things like homomorphic encryption, crypto nets, these kind of things, which enable institutions to benefit from the value of each other's data without breaching privacy or confidentiality law. And I think that's somewhere where we are all going to have to work together. We are going to have a network effort to try and look at how do we deploy these technologies to get ahead of the criminals, because they operate as a very complex and sophisticated network. We need to do the same.
Yeah. I would add to all of these views, I guess in the same vein, really what we're trying to say is that there should be a sort of a marriage between technology and regulation, because the two are complementary to each other. And to me, it's got two dimensions. One is on the micro side. It's really about identity. And what we're regulating for is just the proof of the identity. So if I'm opening a new account, I'll be asked for my proof of name and address. But that's sort of where it really stops. So unless you really are on the terrorist financing list, nothing else would be flagged. Just your gas bill would be filed away. And with sort of electronic accounts and all sorts of data that we can join up together, which Charlie calls the graph, we can ultimately build up the identity of everybody in the world. And not just individual, but also we're sort of focused here somehow on, I guess, retail and individual. But possibly corporate is an even bigger problem, because one company really has, one multinational has 1,000 subsidiaries, which often don't even carry the name. So it is just possible that the money laundering case that you described from Sudan is being laundered through sort of corporate vehicles that actually look like trading companies. So it is precisely not somebody showing at HSBC with bars of gold, but it's something far more sophisticated. So that's on the micro. And then on the macro side, to me, and we've discussed with Nick, it's about data sharing to me, because at the end of the day, again, if we're trying to leverage technology with regulation and regulation with technology, ultimately, if you discover something, it's got far more power if it's shared across the network, because one bank re-KYCs the same customer that's been KYC'd 7 times over, yet the financial crime still occurs. So there's some disjointedness of the information flow that, of course, there's a counter-regulation that there's GDPR, there's privacy, and so forth. So there has to be, I think, some assistance from the regulator to allow the industry to come together, whether that's traditional financial institutions, new financial institutions, and sort of technology leaders like ComplyAdvantage to come together and sort of not be in the penalty box for trying to data share, but on the contrary, to encourage data sharing, just like credit ratings are data shared. Experian and Equifax are there for a certain industry benefit and act as utilities, and there's no reason why OFAC data and financial crime data couldn't act as a utility for everybody's benefit.
I want to move in, I'm quite conscious of the time, I just want to move on to the question we've got from the audience here, and this one seems perfect for Denisse, really. When large corporates and fintechs work together, what advice can you provide to help bridge the potential gap between the difference in policies, procedures that may exist between the two that could hinder a potential partnership?
Okay, so having seen this firsthand, I think there you know, it's amazing. We have a lot of technology out there, but sometimes we just forget to talk to each other. You know, and I think communication is probably the most important thing in making these relationships work. So from the FinTech perspective or the RegTech perspective, if you're looking to start working with a bank, make sure you're able to communicate your governance procedures, your roles and responsibilities, the fact that you have policies and procedures in place, how your compliance department is staffed. What else? Yeah, make sure that you have business continuity processes in place that you can share with them, because they have to comply with, you know, the FCA handbook, which places importance on business continuity, and as it should, because we don't want people not being able to get their money out of a bank machine. You know, for financial institutions, you know, sometimes it is about upskilling. So you have technologists who have phenomenal ideas, right? And some of these guys don't come from a traditional financial crime prevention background. Shocking as it may sound. So if you want to work with a company, they have seemingly incredible technology. Actually, if you have the time and capacity to invest in terms of not necessarily upskilling them, but kind of making sure that what it is that they are offering is what you need. And also taking the time to actually say, well, for us to be able to allow you to come through our supplier vendor management process, some of which can take, you know, 6 to 9 to 12 months. You know, so it's about clarity of requirements from financial institutions and kind of clarity of what's in place, and then how long it's going to take to get to where they need to be. Right? And I think financial institutions should also be aware of the fact that a lot of these are startups. These are new emerging companies, so they don't necessarily have the runway, to use the terminology, in terms of financing to actually be able to work the 6 to 12 months to build a proof of concept, then to go through the internal governance processes that are rightly so, well, maybe it's a bit extreme in some cases, in place to kind of make sure that they are working. At the end of the day, they are the ones who hold ultimate liability for when something goes wrong. They have to answer to the customer, they have to answer to the regulator, and regardless of whether or not they've outsourced the service, they're still responsible. So that's my advice.
So the very human solution of talk to each other.
Talk to each other and share.
And we've also got a question here that I think Jan covered quite nicely about transaction data information pooling. So I'm going to move on to this one finally. How confident are you in the ability of technology, natural language processing in particular, to get the most relevant information? How do you ensure that the tech has not missed something potentially useful? Charlie, maybe you could speak to that, given that you're working quite closely with that sort of
Yeah, so the question is, how can we have confidence in technology?
Or how confident?
Okay,
what's the level of fault, I suppose?
So the basic premise is our competitors, the incumbents, have 500 analysts who manually collate information on 7 billion people and try and track a database of 3 million people, which means they can spend 10 minutes every 4 years compiling a very narrow and shallow profile, right? Whereas we will overnight analyze 10 million documents, right? And so we argue that it's crazy to attempt the former, right? So how confident can we be in the data and accuracy? So I believe in like numbers and systematic, rigorous processes, right? And therefore, what we do is we metronomically track the accuracy and recall of the algorithm, the coverage, the match rates. We can simulate the different coverage rates, match rates, false positives, false negatives, and we can improve, right? Whereas what you see in the incumbent industry is atrophy and decay and failure, right? So, like, personally,
Don't hold back.
The old approach brought you Danske Bank and Swedbank and like cartels and drugs, right? We will bring you a world free of financial crime and terrorism.
Wow.
Bold words. And unfortunately, we're out of
that
time. Yeah, it's a fantastic note to end on there, I think.
Yeah.
But I hope you'll all join me in giving my fantastic panel a round of applause. And thank you very much.